Hello everyone. In this video, we're going to talk about Mullen, trading under the ticker symbol MULN. Before we continue with today's video, if you like my content, please consider to like, subscribe, and comment below. Mullen initially tried to recover over the past few days, going from around 22 cents to the current level of 30 cents. Of course, this is a significant move upward, but it's also a desperate move. Desperate for some air, as the stock appears to be applying once again for a round of reverse stock split. Meanwhile, the company is also pressing legal charges against brokers as it alleges that it is being targeted by short sellers. For the time being, it is unclear whether these attempts will reignite the public's interest in the stock, and the recent price actions don't really suggest that the stock will necessarily have anything worthwhile to show in addition to what we have right now. With that being said, let's also take a look at the technicals. The trading volume of Mullen is currently around 125 million shares versus the average volume of 36 million shares. Over the previous 52 weeks period, the price fluctuated between 39 cents and $132.32. The volume of shares traded tells us how many shares are being currently bought and sold at any given point, and if there is enough liquidity to support a trading strategy. If the float is thin, it would be very easy to influence the stock price, but low liquidity could mean that the demand is limited. When we compare the current volume against the average volume, there might be the possibility for a trend reversal or breakthrough. For example, if the stock were to break through, the current volume would be significantly higher than the average volume. The market cap for Mullen is currently around $48 million compared to the enterprise value of around $17.3 million. As we compare the current price to the historical price level, the stock is currently around 42% higher than the 1-month low, 42% higher than the 3-month low, and 42% higher than the 52 weeks low. On the options market, which often gives a hint on the market sentiment about where the stock price is likely going to go next, the implied volatility is 314% versus the historical volatility of 165%. The put-call volume ratio is currently around 13%. It is normal for many stocks to have a higher put option volume than what they truly deserve because many institutional investors hedge their long positions by buying put options. The most recent volume of options traded is around 35,000 contracts a day versus the 30-day average of 14,000. In terms of open interest, the most recent volume of open interest is 918,000 contracts versus the 30-day average of 1 million contracts. Regarding the shareholder structure, institutional shareholders currently own around 8%, likely as a result of short selling of the outstanding shares and institutional ownership outright. The biggest shareholders include Vanguard, BlackRock, and iShares. Usually, it is better to see some institutional participation when holding a stock long-term because it offers a layer of stability and a token of reliability in the medium and long term. It means that the market is confident that it will deliver the value in the long shot, which is a very important factor to consider for investors. Of course, when it comes to Mullen, currently as things stand, regardless of the institutional ownership, this is not a stock that is really for investment. I would say that this is much more a stock for short-term gambling and speculation. The current short interest is around 29% of the total float, 58% of which are coming out of the dark pools. Typically, if the short interest is above 15% of the total volume and a significant portion of the short volume comes from the dark pools, it may suggest that there are institutional positions taken to short the stock and that there would be potentials for a short squeeze. Generally speaking, in the world of finance, penny stocks like Mullen are a bit unusual and also intriguing at the same time. Those securities are known for being cheap and get a lot of attention from retail traders or regular people like you and I, but they also tend to have very big price swings. Their movements don't often make fundamental sense. At the moment, a bunch of things are affecting the stock market. One important thing is the interest rate. When central banks raise interest rates, it makes it more expensive to borrow money, and that can slow down the spending by regular people and how to invest. For penny stocks, it might mean that people start to expect less from them or to think less of them, and some might even decide to not take these kinds of big risks for the time being, which can explain why penny stocks, especially the really risky ones like Mullen, have been losing value recently. This situation can also lead to prices going up because of inflation. Some people might want to invest in riskier things like penny stocks to try to make more money than what they're losing because of the rising prices. But this might not always work out, and it doesn't have a big impact on where most of the money the market goes to. Big investors usually wait for prices to drop significantly before they start buying again. Also, there's the possibility of a recession, which makes it trickier to decide if it's a good idea right now to buy shares of a company that's supposed to sell EV cars. Well, no longer supposed to, of course, because Mullen actually sells EV cars, even though just a few of them. Unlike other fancy tech companies like Palantir or even what Rework tried to be, Mullen is seen as a company that makes things and sells them to people. They can't really afford to lose money for too long of a time. Plus, if the economy doesn't do well, fewer people might want to buy EV cars, like the ones Mullen makes, because they tend to be more expensive than the regular cars. Then there's the issue of global problems, like conflicts, trade issues, and other uncertainties. These can shake up the financial markets real good. When that happens, investors often look for safe havens to put their money into, like blue chips, commodities, and government bonds, and they tend to avoid companies like Mullen because of their risk profile. All these factors can make penny stocks like Mullen jump around a lot in price and make people uncertain about when or whether they should be buying them. When interest rates go up, investors might get more careful. High inflation can be a chance for some, but a danger for many. And when there's a talk of recession, investors might choose safer things to invest in. It's just logical and part of human nature. Being honest and open about how a company is doing is also really important, especially for penny stocks. And in this aspect, I would say that Mullen isn't really a reference, unfortunately. Smaller companies often don't have the same rules or the company culture to report everything as transparent as the bigger ones or the more established ones do. Investors usually don't want to mess with penny stocks, especially in the long term, because they're not really clear about what's going on, given the fact that they are already risky. Without clearer information, there's a higher chance of scams, trickery, and market manipulation. The company that gives clear and honest information can really make a big difference in how confident investors feel about trading penny stocks like Mullen, which unfortunately, in addition to all the other problems that it's facing, is not really good at. Overall, Mullen will probably be one of the more volatile titles in the market and remain that way, even if it means that the stock is really close to the pitfall. It would be a smart move to keep it on a short list and to prepare to trade the short-term positions for those who wish to go down this path. For the time being, it's better to wait and see where Mullen is going to land, whether it's going to reach around 22 cents again over the next few days or weeks. If that were the case, I would then recommend to commit between 0.5 to 1% of your portfolio in Mullen.